Hi there, welcome to Sterlinx Global. My name is Jay, and I'm one of the specialists in Sterlinx Global, a UK-based accounting firm specializing in traditional business and e-commerce. For our discussion today, we will tackle USA tax disputes, cracking the code for e-commerce sellers. In this video, we will explore the ins and outs of taxes in e-commerce. We'll provide valuable tips on handling usual tax disputes, including sales tax nexus and income tax reporting. By understanding these aspects, you can avoid USA tax disputes and stay compliant with ever-changing tax laws. But first, let us understand what are the common tax disputes faced by e-commerce sellers. Sales tax nexus challenges. E-commerce sellers face complexities in determining their sales tax obligations due to the sales tax nexus connection with taxing jurisdictions requiring collection and remittance of sales tax. Income tax reporting complexity. Accurate income tax reporting is another challenge for e-commerce sellers, involving tracking revenue from different channels, deducting expenses, and ensuring proper income reporting to avoid disputes. Sales tax compliance. Meeting compliance requirements including filing sales tax returns, calculating tax rates, and managing exemption certificates is overwhelming for e-commerce sellers and can result in disputes if not addressed adequately. If you are an e-commerce seller, you understand how these issues can be a headache for sure. Another one, and what you would want to avoid, are sales tax audits. E-commerce sellers undergo sales tax audits by the IRS, where a thorough examination of sales tax records and compliance with tax regulations occurs. This leads to disputes if accurate documentation is not provided or discrepancies are found. The last one is international sales tax challenges. Engaging in international sales introduces complexities with varying tax regulations such as customs duties, value-added tax or VAT, and international income tax treaties, posing challenges for e-commerce sellers to navigate and comply with, potentially leading to disputes. Now that we know the common issues in tax compliance of US e-commerce sellers, we will try to resolve them and share with you how to minimize USA tax disputes for e-commerce sellers. Number one you need to understand is the importance of accurate record keeping. Accurate record keeping is essential for e-commerce sellers to support their tax positions and effectively resolve any USA tax disputes that may arise. Maintaining detailed records of sales transactions, expenses, and financial statements ensures transparency and helps demonstrate compliance with tax regulations. You also need to master navigating sales tax obligations. Navigating sales tax obligations is critical to running a successful e-commerce business. E-commerce sellers must have a solid understanding of the concept of sales tax nexus, which determines the connection between a seller and a taxing jurisdiction. This helps determine where they are required to collect and remit sales tax. Sellers need to identify the jurisdictions where they have a sales tax obligation and ensure they are registered for sales tax permits in those jurisdictions. Also, sellers must accurately calculate and collect the appropriate sales tax amount from customers on taxable transactions. By fulfilling these obligations diligently, e-commerce sellers can avoid USA tax disputes and maintain compliance with IRS sales tax guidelines. Another challenging yet important thing to do is dealing with nexus issues. Dealing with nexus issues can be complex for e-commerce sellers as it involves understanding and adhering to each state's sales tax laws and regulations. Sellers need to analyze their business activities to determine their nexus footprint thoroughly. This analysis includes evaluating factors such as inventory storage, physical presence in different states, and relationships with marketplace facilitators. The next one is Resolving income tax challenges. E-commerce sellers face unique income tax challenges, including managing expenses effectively to maximize deductions. It can also be complete to determine the proper tax treatment for different revenue streams, such as online sales, affiliate marketing, or drop shipping. One approach to overcome these challenges is utilizing reliable accounting software for e-commerce businesses. This software can track revenue and expenses accurately, categorize transactions, and generate detailed reports. Sellers can also educate themselves on relevant tax regulations and guidelines provided by tax authorities. Additionally, leveraging online resources such as industry forums or educational websites can help sellers gain insights from peers who have successfully navigated similar tax challenges. However, seeking guidance from tax professionals specializing in e-commerce can help sellers more in navigating these challenges and ensuring accurate income tax reporting. Sales tax audits and how to prepare. Sales tax audits are routine procedures by IRS that e-commerce sellers may undergo. To adequately prepare for an audit, sellers should undertake several vital steps. First, they should thoroughly review their sales tax records to ensure accuracy and completeness. This includes validating sales transactions, exemption certificates, and other relevant documentation. Sellers must also ensure compliance with sales tax regulations such as timely filing of returns and proper collection and remittance of taxes. Additionally, it is crucial to organize and maintain all supporting documentation, including invoices, receipts, and sales reports. We are close to the end. For now, we will answer 3 frequently asked questions about USA tax disputes for e-commerce sellers. What is the best state for e-commerce taxes? The penalty in the US for filing incorrect taxes can include various consequences. For example, underpaying taxes can result in fines ranging from 20% to 40% of the unpaid tax amount. Late filing penalties can be 5% to 25% of the monthly unpaid tax. Interest charges are also applied to the due tax amount. What is an example of tax avoidance in the US? An example of tax avoidance in the United States is using offshore tax havens by individuals or businesses to shelter income and assets from taxation. Taxpayers can potentially reduce their tax liability by establishing entities or accounts in jurisdictions with low or no taxes. However, distinguishing between legal tax planning strategies and illegal tax evasion is still essential. What is the IRS tax resolution? IRS tax resolution refers to resolving tax issues and disputes with the Internal Revenue Service or IRS. It involves reaching an agreement or settlement with the IRS to address outstanding tax liabilities, penalties, or other tax-related matters. Tax resolution methods may include installment agreements, offers in compromise, penalty abatement, or other negotiated arrangements to resolve tax problems. Resolving tax disputes requires careful analysis, attention to detail, and a proactive approach. As an e-commerce seller, effectively managing and resolving tax disputes can protect your business, maintain compliance, and focus on achieving long-term success. Check out Sterlinx Global for further business and tax advice based on your specific circumstances and unique needs. And that's it for today's video. Thanks for watching. We hope we thoroughly cracked the code in handling USA tax disputes for you as an e-commerce seller. For more professional advice on your tax accounting needs, consult us by visiting the Sterlinx Global website at sterlinxglobal.com. If you enjoy our content and want to explore more about similar topics, please like and subscribe to our channel. To stay updated, why don't you have a look at our other social media platforms? The link are in the descriptions below. Once again, I'm Jay from Sterlinx Global, and I will see you in the next video.